the S-Corp owners, the complicated winners. So if you're an S-Corp owner, you are still a winner under the new law, but with a few more hoops to jump through. You do qualify for the 20% QBI deduction, just like other entities, but only if your payroll is structured correctly and you are paying yourself a reasonable salary. Let me give you a real example. So let's say you are an S corporate which earns $200,000 in net profit, and you pay yourself a reasonable salary of, let's say, $60,000, and the remaining $140,000 is taken as a shareholder distribution. So here's how it will be broken down. You avoid self-employment tax, which is 15.3% on the $140,000. So that will give you a tax saving of $21,420. Now, you still qualify for the 20% QBI deduction, which means 20% of the $140,000, so that comes out to $28,000 deduction. So depending on your tax bracket, that would give you another $6,000 to $10,000 in annual tax savings. So total tax benefit up to $30,000 or more just from restructuring alone. But here is the catch. If you pay yourself too little or nothing at all, the IRS could reclassify distribution as wages, hit you with the back payroll taxes, penalties, and interest, and might even disallow your QBI deduction altogether. So S corporation, it's a tool, not a loophole. Use it wisely. So here's some critical S-Corp moves that I would suggest for you to take advantage of right away. Number one, review your payroll immediately. Pay yourself a reasonable salary based on your role, based on the industry and contribution. And do not guess. Document your reasoning. Number two, keep clean records. Use the proper payroll systems, not just transfer from the business to personal account. Issue a W-2. Track every reimbursement and deduction properly. And number three, maximize equipment deductions. Use 100% bonus depreciation to your advantage. So here's an example that I would like to share. So let's say you run a consulting firm, and this year you decided to upgrade your office setup. So you purchased a desk and a monitor that costed $3,000. And then you purchased a camera, a mic, and lighting setup. So that costed another $5,000. And now you purchased a new SUV for $40,000 and you're using it for the business. So altogether, you spent $48,000. So the $48,000 are fully deductible this year. This can reduce your taxable income from $200,000 to $152,000, bringing even more savings and strengthening your QBI deduction. So now let's take it even further. Let's now say that you taking advantage of the pension contribution strategy. With a $60,000 salary, here's how you can actually supercharge retirement savings while cutting your taxes. So you can take advantage of the 401k employee deferral, which is up to $23,500 this year if you are under 50 years old, or if you are over 50 years old, then you can make a deduction of $31,000. Or this is with the new law, we have this bonus special catch-up contribution for those that are between the age of 60 to 63. They can make a contribution of an additional $11,250. Also, at the same time, you might be able to take advantage of the employer SEP or a profit sharing contribution, which allows you to put away up to 25% of your salary. In this case, it would be $15,000 of that $60,000 W-2 salary that you're taking. So now the total retirement contribution might be between $38,500 to as high as $49,750. Now, if we convert this deduction into the actual tax savings, that will be between $9,000 to $18,000 in total tax savings a year. So as you see, lower your taxable income even more and build wealth tax-free for the future. So here's another bonus strategy that I would like to share with you. An accountable plan strategy. So what is an accountable plan? Accountable plan lets you reimburse yourself for the business expenses absolutely tax-free without triggering any income. So here's how it works. Let me give you an example. You work from home and you have home office expenses like internet, utility, and then all the other expenses. So if you combine and calculate all of this, this, it turns out to be $800 a month. So now under the accountable plan, we take this $800 a month times 12, that comes out to $9,600 a year, absolutely tax-free. This $9,600 becomes a deductible for your business, but not taxable to you personally. And you actually can think of this as a bonus money the IRS doesn't even tax. So here's the final thought about the S-Corps. The S-Corps are very powerful, but only if managed properly. So if it's done right, they offer one of the best combinations of tax savings, retirement buildings, and liability protection available to small business owners.